Hello everyone and welcome back for my final daily report market video with me, Richard Perry, market analyst at Hantec on Wednesday the 31st of July. Now we're going to look at this gold chart which has been consolidating in front of the Fed, but that consolidation is just beginning to edge a little bit higher in the last couple of sessions. However, the consolidation does still hold between 1411 to 1433, that range that basically was formed through the ECB day last Thursday. But in the last couple of sessions, we have seen gold ticking back higher. Now, I think that really does reflect the fact that the gold price really does maintain this buy into weakness stance, and you can see the fact that the market is holding this 21-day moving average, which comes in at 1417 at the moment. I think that really does reflect the fact that the market is still fairly positive on gold. We've got the momentum indicators, which have ticked back a little bit higher. It's still in this drift mode, but I still think that given the fact that gold has not really engaged in any real corrective move, then I think that this just suggests that gold remains a buy into weakness. That 1411 basis of support is holding, and now we're starting to form little higher lows throughout the last 4 or so sessions, putting pressure on that 1433 mark, which was, as I said, on the ECB day, that volatility in the wake of the ECB decision. And I think we're likely to see a possible breakout, but not in front of the Fed, is my anticipation. Now, how the Fed comes out today will obviously drive gold, I think, in the next few days. But I think there will be a very interesting reaction to this Federal Reserve meeting tonight. A dovish Fed, or any decision that cuts rates and then hints at further rate cuts to come, I think it's going to be driving gold higher. Anything that suggests one and done, I think for the Fed, I think will be a corrective move on gold and then probably breach that 1411 mark. A breakout above on a closing basis above 1433 opens 1452 and then beyond potentially. But as I said, 1411 is that floor at the moment, which has been holding over the past couple of weeks, and a breach to the downside becomes 1400 big figure as an important pivot level. But I'm still anticipating gold to be bought into weakness. I think that the reaction on a medium to longer term basis is still going to be to buy into any corrective dips. So even if we were to see 1400 breached, I would expect that would be the source of the next buying opportunity ultimately, but it just depends on how far to the downside it goes before finding support again. But ultimately, I still find gold going higher, and that's my expectation. So all eyes on the Fed then tonight, and I will speak to you again tomorrow. Thank you.